Today on TyNance, let me take you through my stock positions and explain to you how I deal with the current market environment. In the short term, we have tariffs looming over the markets, we have DOGE shaking up markets by firing government officials, and consumer sentiment is very low. Next to that, the market is not sure if tariffs will cause inflation or stagflation. All those things are causing uncertainty, and the markets do not like uncertainty. Uncertainty makes markets shaky. Now you could just focus on the short term and be afraid of buying stocks, try to short the market or panic selling, but that is not what I am doing or what I made this channel for. This channel is meant for long-term investors that want to grow their net worth by long-term investing in good companies that grow over the long term. Actually, I haven't gone through my strategy just yet, and I am thinking about creating a video of my current strategy, which is well defined. Now let's drop into the video. First off, let's talk about tariffs. Tariffs on imported goods will usually mean that prices go up. Companies increase prices so that the tariffs do not start to hit their margins. This can cause inflationary pressures, which can cause the Federal Reserve to not further decrease rates and/or restrict monetary policy even further. On the other side, we have consumer sentiment running very low right now, and higher prices could keep them from spending, which can cause stagflation. This is the other side of the coin. As the outcome is very hard to predict, this is causing market uncertainty, and that is why markets are falling, stating the obvious. Now I hear you ask, if this is so obvious, then why do you not sell out of your stocks and buy them back cheaper? Let me explain this to you. First off, if my aunt had wheels, she would have been a bike. What I'm trying to say here is that those things are very hard to predict beforehand, and in hindsight, this always seems obvious. Tariffs, however, can just be a tool for Trump to get some deals through with other countries, and just as easily as he announced the tariffs, they can be abandoned. Hence why I am not selling my stocks and focus on the short term. In the long term, the stock market goes up, and if you buy the right stocks, you will profit from that. This is where my influence lies and what I am focusing on. This means buying companies that can endure recessions or multiple economic headwinds and come out stronger. I see the current market conditions as a buying opportunity. Enough about market conditions for today. Let's head into my current portfolio. I will start with the biggest position and work my way down to the smallest position. First off, Meta Platforms. This stock has been my biggest position for almost 3 years, I believe. It's also my biggest PL position. Even though the stock went up this much, I do not think it is overvalued, and after the recent sell-off, I think it can be a very good buy from here. Since Meta is already my biggest position, it is not my biggest priority to increase this one, but I will definitely hold on to my position as long as my thesis in the company does not change. I believe this company can keep growing for years and will go to thousands dollars per stock and beyond over time. My second holding, Palantir, is a controversial holding from which people have been saying it is overvalued for a long time now. Honestly, I agree on that, and I already sold half of my position, and now I'm still holding on to 100 shares. I did sell a call at strike 110 that will expire this month, for which I received $240. There was a moment the stock was around $125, but due to the recent dip, it dropped all the way down to about $85. It seems I will not be assigned on the call contract that I sold, so I will keep the shares. But since I agree that the stock is even after the huge drop still overvalued, there is a chance I will sell another call contract and receive premium from that as well. Maybe I should have just sold out of this one instead of selling a call, but if the momentum was still here and the company re-accelerated growth even further, the stock could have gone up even more. I would have seen it go up to $150 if the momentum was still here, which is not the case, of course. Next holding is PayPal. After holding and buying the dip on PayPal for a few years, I was finally up on the stock, but after the last earnings call, the stock started dropping from over $90 to now $70 a share. It's a little sad to see the momentum fade in this stock. While it was finally here, the momentum was finally here, and the stock was finally rising after patiently waiting for about 2 years. I believe about 2 weeks ago, PayPal had their investor day. I watched the webcast of the investor day, and I think their plans are very promising. Of course, they now need to execute and show good results so the stock can finally go back up to over $100. For now, I put my faith in the management team and hold on to my shares. If it drops below my average buy price, then maybe I will add to my position. Next stock is PepsiCo, just a very defensive and boring company in snacks and drinks. This stock is balancing my portfolio out nicely in the sense that since the market has started dropping, this stock is up. Over the past few years, PepsiCo has not performed that great, but I think they will be able to turn things around like they always do. If growth companies keep falling, there's a chance I will sell out of PepsiCo and put the money into companies I have more conviction in. Alphabet is a position I have recently added a lot of shares in, and because of this is now my fifth largest position from the Magnificent Seven companies. I think this is the cheapest one today, and I believe Alphabet will keep outperforming the market in the near future. I wouldn't mind to see the stock price drop even further so I can make this one of my biggest positions. The next stock, Shopify, almost 2x or doubled short after I bought the shares. This is a company I believe can keep on growing for years to come in the future. I hope this stock falls more so I can increase my position, as I did not get a chance to fully build my position due to the sharp increase in price. Next up, we have Hims and Hers. Hims and Hers is a stock I bought at $8, and even though it's lost half its value in the past few weeks, I am still way up on this position. This company has a lot of potential, but in the short term, there is some selling pressure because they will stop selling their semaglutide, which is a GLP-1 for weight loss, and now the market thinks the growth story is over for Hims. I don't think it is for two reasons. First, they are selling replacements and they are still growing very fast without semaglutide. Second, this stock is a bigger position for me due to the huge stock price appreciation. The company is just making profits and is not so mature just yet, hence why I do not want to increase my position for now. Next up, we have Advanced Micro Devices, or AMD. AMD is a stock I recently added and am averaging down on. AMD, its fundamentals are rising, while at the same time the stock price is falling. I do not want to make this one of my biggest positions, but if it drops further, I will buy more shares of AMD. Fiji Properties is a hold for me, just like PepsiCo, it went up since the market started dropping. REITs, which Fiji is, a real estate investment trust, are finally performing better than the last few years when interest rates were relatively high, or at least higher than they are today. Fiji brings in a stable dividend, and currently I am fine holding onto my shares of Fiji Properties. Next up, we have Nike. Nike is a turnaround play. I believe the new CEO, with all his experience in the company, can bring this company back to what it always successfully has done and what the company used to be. Before a turnaround plays out, I'd like to increase my position in Nike, so I would not mind if it goes down or falls more in the short term. Next position is ASML. ASML had a great quarter from an earnings perspective and our guidance is looking good, but this company's stock price is held back due to tariffs and geopolitical tensions. Things like some of their machines cannot be sold to China. The recent dip gave me the chance to add to my position, so I added one share last week. And then next up we have Elf Beauty. Elf Beauty's stock price is punished hard because of lower growth expectations in combination with tariffs as they create a lot of their products in China. Even though the company is facing some headwinds at the moment, I think the company will be fine, so I will average down if the stock drops more. In the last couple of weeks, I already doubled my position in Elf Beauty as it was falling. The next position is Celsius. Celsius recently announced a deal to buy out one of their competitors in Alani Nu, if I spell this correctly. This seems like a promising acquisition to me, but I do not want to make this too big of a position. If the stock drops back towards $20 again, I gladly buy more with the current fundamentals so I can decrease my average buy price in Celsius. Next up we have Enphase Energy, and this stock is my worst position percentage wise. The solar industry has been in a bad spot for a while now, and it would be nice to see some recovery here. If the stock drops to $50, I will likely buy some more Enphase. Next up we have Alibaba. Alibaba went up very nicely this year. I can finally say that after a few years of the stock going absolutely nowhere. I think this stock will keep being volatile. Baba showed some nice growth in the last quarter, so let's hope they can keep accelerating due to the China stimulus checks given out. I will not be buying more of this stock above $100, so it's a hold for me today. Next up we have Tesla. Tesla has a lot of issues right now. It's probably the most hated stock in the stock market at the moment. The main concern is that Elon Musk is making too much political noise, which is causing lower sales for Tesla. I regret not selling this stock after it almost was at $500 a few months ago. Even though I'm still up on the stock, I lost a lot of my gains by now. The stock lost almost half of its value since then, so I do not feel anything for selling out right now, even though I see it drop even more in the short term. It not, doesn't necessarily have to drop more, but with the current conditions and with how much the stock is hated at the moment, it can definitely drop even further. They have some amazing products coming up soon, like robo taxis, FSD, further rollout of FSD, and they are also working on Optimus robots. So let's wait and see if Elon and the team can turn this stock around, and if it's able to go back above $400. At least I hope it will do that in the next 52 weeks. Next stock is LVMH, or Louis Vuitton Moet Hennessy. It's a very steady luxury goods company that is paying me a nice dividend along the way. If this stock drops back towards $600, I'd like to increase my position in LVMH. Until that time, it's just a hold for me. Next, we have Mercado Libre, showed some amazing growth in the last quarter, but lost most of the gains due to the market correction. I already explained in the previous video that the stock price of Mercado Libre is so high that I will not likely increase my position around this price. If I would increase my position around this price, it would immediately be a position of over $4,000, and I don't like to make Mercado Libre such a big position, as there are still some risk involved with this being a Latin America company. Next up we have SoFi. SoFi Technologies doubled in a few months after I bought 100 shares. I root for this one to go down so I can increase my position for a lower price. A little bit or kind of the same situation as with Shopify, which doubled soon after I started buying, which caused me not being able to finish my position, or at least making it a bigger position before the stock went up. Then last but not least, FuboTV. FuboTV is my smallest and probably most risky position. This is the only stock I hold that is not making profits just yet, although it reached positive free cash flow in the last quarter, and if the deal between them and Disney's Hulu goes through, they should be making profits right away. If the deal goes through and the stock shoots up a lot, there is a decent probability I will sell out of my position. There's also a stock I sold in the past few weeks. About 2 weeks ago, I sold all of my 100 shares of Verizon. I found better opportunities in the market than the slow growth that Verizon was providing. I bought companies like ASML, Elf Beauty, and AMD in return for Verizon. I made over 30% in profits on this stock, including dividends. As I'd rather put the money in other stocks, I am happy to take my profits on this one and move on. I bought Verizon in 2023 when my strategy was not as defined as it is today, and in my current strategy, this would not be a stock I'd buy. So I thought this was about time to take my gains on this one and move on to the next chances. Next to my portfolio, I thought it was interesting to talk about my results for 2025 up till now. Up here you can see my account value chart year to date. The year started off really well up until about the 19th of February when markets started dropping. At the time I was up over 15% for the year, which is pretty decent, especially if you take in consideration that I reached about 50% returns over 2023 and again in 2024. At some point I knew the markets will be dropping, and the past few weeks have given me some 2022 vibes when my portfolio dropped for a year straight. Since the 19th of February this year, the fall went quite rapidly, and I now have a negative return year to date. If the uncertainty continues, the market can definitely drop some more. To me, it doesn't really matter what happens in the short term. If the market goes down, I will just buy more great companies for a lower price, and if the market starts going up again, I will make profits. Let's patiently wait and see what happens, navigating buys, sells in the meantime. That's it for today. Note that this is not financial advice. You can find the full disclaimer in the description. Please like, subscribe, and thank you for watching.